This is KIFS Crypto here with your weekly news update. I thought it would be a good way to start this video off talking about what I've learned in the last 3 years from my own mistakes so that you don't do the same. As we believe that portfolio management can be psychologically deceptive. What I might mean by that is your own mind can stop your portfolio from growing with the simplest of errors that often, unfortunately, fall under oversight. One of them is that it is often preached to be a long-term holder. And as much as that is very true, and I certainly agree with those priests with heavy bags, how long is too long? Yes, holding is good, but you have to have a set in stone date to withdraw, as a coin may go sour and suddenly change its policies. Or you may be depending on that money, and even though your bag is 10x'd, you need to remember if it's in your bag and you haven't sold, you haven't actually realized your profit, and it can certainly dump back lower than even your buying price. So be a long-term holder, but definitely have a cutoff date. However, if you need the money, always match your needs to your goals, as that can be easily forgotten and buried under a pile of coin analysis. You can find the in-between spot as well. Like for me, I have a 6-month cutoff date where I sell a major portion of my portfolio based on my needs, but keep a portion untouched for a longer term cutoff date. So with my other jobs that I'm working, I dollar cost average into my portfolio, keep a portion untouched for a longer cutoff date, and I keep a portion to be flipped and completely sold in 6 months to a year. I use this example simply to show you how flexible your portfolio can be and to teach you the third point. Don't work uncomfortably and bend to your portfolio's needs. Let the portfolio bend to your needs and work for you. At the end of the day, always remember that you want money to enjoy your life, not to starve till your portfolio reaches your expectation, which could have unexpected results. The thinking that leads to the deepest regret, in my opinion, is having currently 10x gains in one coin and not withdrawing it at all or even a portion of it, even though you need the money because you feel that one day in the next 10 years it will 100x. Firstly, you don't know that. The coin could turn sour any minute. Secondly, if it turns sour, not only have you lost your initial buying price, but your sacrifice and patience turns empty, and you even lost the 10x that you could have enjoyed. Life is too short. Long isn't really that long. The second point is to always realize that psychologically, we tend to get attached and favor anything that gives us awards. If a coin gives you 10x returns on your investment, and even if you sell and realize your profits, you may fall head over heels over that project in the near to far future, buy it again, even if the project has turned for the worse. Your past experience with that project or coin, which has 10x'd, has been positive. So you may reinvest and fall under the bias trap. And you definitely don't want to do that. I'm glad you enjoyed that. These are lessons that I've learned in the last 3 years, and I thought it was very important to share this with you. Now, moving on to the news, the SEC is going after NFTs in a major way by targeting Yuga Labs, which is the most profitable and biggest NFT in the world, the Bored Ape Yacht Club. If this goes to the SEC's plan, then a lot of legal heat will follow all the other NFTs in the space. However, the SEC could end up fighting a lawsuit against Yuga Labs like they have done with Ripple. The positive is that they have been fighting Ripple for over 2 years and it will be coming to a verdict soon. So the positive is in the sense of Ripple winning, as it seems to be moving more, leaning towards that direction. So if Ripple wins and Yuga Labs wins, this could humble the SEC in the long term and give them a bigger boundary on stepping against crypto. It'll give them a little bit of distance. So yeah, this could actually work in our favor in the long run. I mean, sure, in the past the SEC won against ICO projects, but then they got too cocky. If anything, this will further paint the crypto narrative with strength if all works out to plan. If two major crypto agencies win against the SEC, of course, that's going to paint crypto and give more belief into the crypto space for new adoption. Also, another point I would like to bring to your attention is simply the fact that a lot of funding for the SEC comes from Wall Street. And this is a very important point. And so if you follow the money trail, you come to know that Wall Street definitely has negative intentions for crypto. Now, why do you think that is? Drop a comment and let me know what your thoughts are. Moving into the markets, Bitcoin is currently at 19,180 and Ethereum is at 1,288 as of time of recording. The CPI report, which is the US Consumer Price Index, was released this week. And you know how that reflects onto the crypto markets. The CPI rose 8.2% in the year through September. This has landed above the economists' forecast and marked a very small slowdown from the August pace. Not to forget, core inflation, which removes food and energy costs, rose to a 1-year rate of 6.6%, the highest since 1982. The funny thing is, the markets are reacting differently to the CPI reports and inflation, as usually in the past, this would have caused the Wall Street indexes and crypto to go down in price. However, funnily enough, the opposite is happening, with Bitcoin up 1%, S&P up 2%, Nasdaq is up 2%, and Dow Jones is up a whopping 5%. Why do you think that is? Moving on to Google. Google selects Coinbase to take cloud payments with cryptocurrencies. Just this week, Google announced the partnership with Coinbase to allow users to pay for cloud services with crypto. And Coinbase in return will move their data-related applications over to Google Cloud instead of using Amazon Web Services. In the year 2021, Google brought in $19 billion in cloud services. Bear in mind, cloud data storage is in high demand and is a necessity for many different companies all around the world. What I'm scared about is that Google is good in terms of bringing more adoption into the space of crypto. However, what I don't like is the fact that Google's philosophy is very centralized and has extremely high potential of taking over the entire crypto space, of completely dominating the space, which the crypto philosophy is decentralized. Also on Google, another major headline is that you can track some Ethereum wallet addresses directly on Google, because as you know, usually you would use your very own Etherscan. Lastly, Target and Best Buy, two massive electric retail stores, are allowing you to buy ledger hardware crypto wallets. So, to conclude, amidst this bear market and global meltdown, in many different shapes and forms, the crypto space is inevitably still growing and getting stronger and stronger in terms of mass adoption. I'm here to demystify the complexity of the crypto space one video at a time. If you like what you see, you know what to do.